Bank of Japan, MOF's Kanda, saying they have intervened in FX markets, saying we have taken bold actions. FX moves have been sudden, one stop. Again, we don't know exactly what form the intervention has taken, but Kanda saying that they have intervened in markets. We are seeing a remarkable turnaround in the dollar yen. It was down more than 1%, the yen versus the dollar at 1 point today. Now dollar yen is down about a third of 1%. Again, Kanda from the MOF in Japan saying that they have intervened in the FX market, saying that they will monitor with high sense of urgency. Again, saying that they have taken bold action in markets. Let's get back to George Saravelos, head of FX strategy at Deutsche Bank. George, what are your first take on these lines coming from Kanda?
So I think it's clearly giving a signal that they're becoming a bit uncomfortable with how quickly things are moving. And as you mentioned, overnight, there were huge moves in dollar yen. But at the end of the day, I'm not convinced this is going to be effective. The first reason is it's not coordinated. You're not seeing a participation from the side of the US. And historically, it's only coordinated interventions that have proven more powerful. But the second and most crucial point is that then this is leading to contradictory policy within Japan. You have the central bank on the one side easing policy, injecting liquidity into the system, and the Ministry of Finance on the other side trying to remove liquidity and strengthen the yen. That's a policy inconsistency. I think as they're selling reserves, for example, you'll then see the market think about the transmission channel, which is selling reserves implies selling US treasuries and higher US yields, which push dollar yen higher. The point is there's a lot of internal contradiction here, and they will have to do very large amounts to have any sort of impact, which I suspect over time will be more limited once the initial positioning gets flushed out.